Hello everyone. Today's video we are going to look for fundamental analysis for the next part, as well as for the important part will be EPS and PE ratio. Okay, everybody will look for EPS as well as PE ratio. As you are a beginner, if you're coming to the stock market, in a sense, this basic terms you should know. What is EPS and what is PE ratio? Okay, and from here we will look the EPS as well as PE ratio, the meaning, how you are going to calculate, as well as what is the investment decision you are going to take it after getting the value, and everything else we can look in this video, and you can make use of it as a beginner. And even though the student, those who are doing for MBA finance and all those people, it's very helpful for you to learn these things. Okay, let's see. This is what the agenda for this presentation. We are going to look for the introduction about this one, and what is EPS and PE ratio, and how we are going to calculate, and after calculating, once you are getting for the result, what's the investment decision you are going to make about your fund, and the final will be summary. Okay, so these are all the things we are going to discuss here. So let's see about the introduction. What is EPS and PE ratio? How EPS is very important, as the same way PE ratio is also important. And EPS we call it as for earning per share, and PE ratio we can call it for price earning ratio. Many ratios will be there, right? So these two things, EPS as well as for price earning ratio, will be the key facts for each and every company. Okay, once you're thinking, okay, let me purchase for this particular stock, in a sense, first you will look for the market capitalization in order to identify it's related to which sector. Then the second step, all the people will go and look for EPS as well as for PE ratio. That much important for these two terms. Okay, now what is EPS and what is PE ratio? As per the definition, let's see. Okay, the EPS will be to measure the company's profitability. Okay, the expansion for EPS, earning per share. The company's profitability, in a sense, say for example, if you're purchasing as a general public, okay, I'm the investor, I'm going to purchase for MR stock. Okay, so I'm purchasing for one stock from MR. So how much of profit the MR company will make? That's called EPS. So you can understand, right? I am purchasing the stock. If the investor is purchasing, in a sense, what is a profit the company will make? That's called EPS. Okay, and what is PE ratio? It will measure for company share price to its earnings. Earnings, in a sense, what? That is what EPS. Okay, both the things will be interrelated. Through the PE ratio, you can identify that respective stock will be undervalued or overvalued. Okay, this is a thing you are going to identify under the PE ratio. So PE, in a sense, price earning ratio. How I can know it's undervalued or overvalued, in a sense? With the help of that result, you could know it will be undervalued or overvalued. Okay, I will show you for the example of companies which is belong to in India as well as for UAE also. Okay, under this PE ratio, there are two types will be there. That's called trailing PE ratio and forward PE ratio. That's very important. Okay, trailing PE ratio, in a sense, for the historical, for the 2 quarter, you can take it. That is a 12-month duration. If you're calculating for the ratio, in a sense, that's called trailing PE ratio. And forward PE ratio, in a sense, forecasting PE ratio for the next 12 months. Okay, with the help of historical data, you're going to predict for the future how much will be the PE ratio. That is called forward PE ratio. Normally these things will do for fund managers as well as analysts. They will do it for forward PE ratio, and once the company will publish, okay, that time the PE ratio what they analysts predicted, in a sense, automatically the share price will go up. Okay, if it has fall down, in a sense, the share price will come down. This is what the thing will happen even from the EPS as well as for the PE ratio also. Okay, and let's see how to calculate for EPS as well as for PE ratio. Okay, and the real example as well as for the along with the websites and all, I will show you. Okay, so the formula for EPS as well as PE ratio, we can look over here. This is what the PE ratio formula. For PE ratio, the market value per share divided by earning per share. Okay. Market value per share in a sense, say for example, what is the current market price today? Okay. In the exchange, what is the price trading for the respective stock? That's called market value per share. And earning per share, it's available under the financial statement. You can take it over there. Okay. And for the EPS, how we are calculating in a sense that normally we call it as PAT, that is profit after tax. Otherwise we can call it as net income after tax. Okay, after deducting all the expenses, it will come, that's called net income after tax, divided by total number of outstanding shares. This is also, these two things will be available in the financial statement. I will show you where it's available, and those values only we are going to calculate for this PE ratio as well as for the EPS. Okay. See here, for the Indian stock, I will show you right now how based on PE ratio we will say it's undervalued or overvalued. Okay. So only for the PE ratios, see here, it's for Adani Total Gas, it's available stock PE, it's available for 158. Okay. And with the help of this PE ratio 158, you cannot take a decision it's undervalued or overvalued. Okay. You need to compare with the sector PE ratio, or else we can call it as industry PE ratio. Okay. And see here, from it's available for EPS, that is 6.07. Okay. There is a positive EPS will be there, and 6.07. So from here 158, while you're comparing with the industry EPS 15.8. Okay. So the industry PE ratio 15.8, while you're comparing with respective stock PE, it will be higher, right? The value will be higher. From here 15.8 and from here will be 158. It means what? The stock will be overvalued. Okay, that's the decision you're going to take it. As again, I repeat, the stock price you need to compare with the sector PE. Okay, the sector PE will be low and stock PE will be higher. In a sense, the stock price will be overvalued. Suppose from here 15.8 and from here it's available for 14, in a sense it will be undervalued. For the undervalued, in a sense, you can purchase for the stock. That is what the decision you have to make it in terms of PE. And in terms of EPS, in a sense, what you need to do, the EPS will be positive or higher while compared with the previous quarter. Okay, almost for 25% higher. Okay, you need to look for the financial statement. If it is 25% higher, in a sense, automatically you can purchase for the stock. It means what? The investor having a positive opinion, the stock price will go up. Okay. So in terms of PE ratio, it will be overvalued. It means what? We not required to buy already in a market, it's overvalued only. So, and for the second one, I will show you. See, this is a BCP power control. While you are comparing with the industry PE, it's low only. It means undervalued. Okay. See here, industry PE ratio 36 and stock PE ratio 22 only. It's low. While compared with the industry, it means undervalued. We can purchase for the stock. Okay, that is what in Indian two company I have taken. I have explained for the PE ratio. Okay, how you can judge for overvalued or undervalued. But I did not give a suggestion for overvalued you cannot purchase, or undervalued you can purchase. Just you can understand what is overvalued and what is undervalued. Okay, then at the end of this video I will tell you overvalued, in a sense, either you can purchase or sell. For undervalued, in a sense, you can purchase or sell. That I will give you at later. Now we can look for in UAE market. I have selected for this MR stock. Okay. Now we are going to look over here the overview. Okay. Price earning ratio, from here it's available for 6.26. See, from here it's available TTM. TTM, in a sense, trailing 12 month. Okay. So the previous 12-month comparison PE ratio only given here. As the same way, EPS is also given for trailing 12 month, that is 1.28. So we got it this one, but we need for sector PE, right? So for the sector PE, this website it's not available. So I am going over here for the Simply Wall ST. From here you can look, this is a 6.3 for MR properties. Okay, while they are comparing with the pure other companies also, the average is available 8.5. So while you are comparing with sector PE, okay, 8.5 comparing this one 6.3, that is a low, it means undervalued. Rock properties, you can look, it's 12.1 and average will be, the industry average will be 8.5. It means what? It's overvalued. This will be MR properties undervalued and this will be the overvalued. Okay. This is a way you can justify, and EPS I already told you, you can compare with the previous financial statements. So you can go from here. Okay. And from here you can come down under this price earning per share, right? You are comparing, you need to compare over here what is a percentage, the increase in a sense. Automatically you could know from here it's available 0.33 and from here it's earning per share will be available 1.28. It means what? There is a positive movement. You can compare the percentage over here. So there should be a growth is available for MR properties. That is what they mean. So you can take for investment for this one. I'm not giving a suggestion you need to buy for the MR properties. I'm giving for educational inputs. Okay. If it is this kind of figure comes, this kind of percentage increase in a sense, what kind of decision you need to take it. That's it. I'm not suggesting for MR properties you need to buy. I'm not suggesting the other RAP properties you should not buy. Such kind of things I'm not telling. Okay. Only for the educational inputs I'm giving to you. Based on that, you can analyze for other thing also. With the help of EPS and PE ratio, you should not take a decision of it, whether you need to buy or sell, right? Many other parameters also available. Based on that only you need to take it. So this is what the example you need to take it over here and you can take a decision of it. And outstanding shares, see here, from here it's available for outstanding shares. Why? Because we already looked for the formula, right? From here, if you're going in a sense, see here, total number of outstanding shares. That one you can take it over there. And from this one, another thing, net income after tax, right? Profit after tax. That one you can come here, net income, the diluted. See here, the net income after deducting preferred dividends. See here, diluted net income available. That is called net income after deducting all the taxes and everything. Okay, so this one you can take it and you can calculate for the respective EPS as well as for PE ratios and all. Okay, so from the statement available all the detail, you have to take it and you have to calculate for the required details. Okay, now already we looked for the meaning as well as for formula for the calculation, and real life example also I have shown over there. Now what is the investment decision we need to take it if it's available for overvalued and undervalued, or EPS will be higher and low. Okay, that is what we are looking over here. If it's a high EPS, okay, it means what? Making more profit, so investor get attracted to invest. It means what? The investor think, okay, the company is making more profit, so it means there should be a growth is available. That is what they will think and they will invest. Automatically the stock price will go up. Okay, so every investor will think that the profit making company, in a sense, automatically they will invest, the stock price will go up. And once you are looking for low EPS, okay, there should be a negative. It's showing for, example, if it is showing for 1 year, it's showing for negative and continuously it's coming for negative, in a sense, investor not willing to invest. Suppose in 1 quarter only there should be a negative, and rest other quarters there should be a positive, in a sense. You need to look for other previous data also. You need to look and do for a consolidate whether it is positive or not. Then you have to take a decision whether you need to invest or not. Okay, only if you're looking for particular quarter and if you're taking a decision that is not good, you need to take it for at least for 10 years or 5 years data. If it is coming for low EPS, it means negative or low, in a sense, you have to do those things. And normally, which is high EPS, in a sense, while you are comparing with the EPS from the previous quarter, there should be 25% will be high, will be there. It will be well and good, right? While compare with the previous quarter or previous year, there should be 25%. If it is EPS 10, if you're putting for 25%, that is 2.5. Right, so 12.25 it's coming for the next year, in a sense. That should be a good moment you can invest for the respective stock. As the same way for PE ratio, what's the investment decision you will take it? If it is a high PE, I told you for Adani, it's for 158, something like that, right? So such kind of cases, the investor will think that the price will go up. There should be growth is available. Okay, that's the reason they are buying. So they are investing on it. We cannot say we should not buy the stock. Understood? So we cannot say the share price will fall down. All the investor, they will think that the share price will move up because there should be growth is available. That's the reason they are investing. So with the help of this PE ratio, just you can compare if it is low or higher, it means undervalued or overvalued. That's it. Okay. If it is overvalued, in a sense, respective stock is not good, not that kind of meaning. Okay. If it is low, in a sense, that stock is good, you can invest. Not like that. At any time, it might be fall. So in other parameters also will be there. You need to compare those things, and after that, you have to take a decision of it. Okay. Normally, the undervalued stock we can purchase. Okay. Normally, for technical analysts and fund managers, they will give a suggestion. If the stock value, we looked for BCP, such kind of stocks, right? And we looked for this MR. Right, it's undervalued. So such kind of stock, normally the analyst for 80 to 85% people will say you can purchase for a stock. Okay, I think now you can understand the formalities of PE, how it is running for PE as well as for EPS, right? Based on that, you can make a decision of it. Now you can understand what is EPS and what is PE ratio and everything else, right? So this is what the study. Okay, this is what the working paper which has been published in a particular journal, and what they are saying, in a sense, even for trading view also it's available. Okay, so the PE ratio over 30, in a sense, it's like a we call it as a growth stock. It means investor think to grow or profitable in the future. Okay, so Adani Gas will be 158. It means what? The investor will think that it will give the profit in the future. That's the reason they are investing. So investor point of view, that's a growth stock. Okay, so that's the reason they are investing. It will be higher also. And if the PE ratio will be 10, we can call it as value stock. The company is already profitable and have a strong growth in the future. Okay, that's the reason the PE ratio will be below 10. So you can understand the below 10, we can call it as a value stock, and over 30 will be, we can call it as a growth stock. That's a mentality for the investor. Okay, based on that, you need to take a decision of it. And overall, if you are looking, in a sense, for the PE ratio around 18 to 25, it is well and good. You can invest. Okay, if you are comparing with the index, okay, index PE ratio, you can look. If it is available for 18 to 25, in a sense, it is well and good. You can invest for any of the stock which has been listed respective index. NSE, if you're looking, in a sense, right now it will be 22 point or something, 22.5, like that, right? If you're looking for DFM, it's around 52, that is 52 or 53, something like that. Okay, so normally the PE ratio 18 to 25, it is well and good. Okay, that is what the study says related to statistics. Okay, now you got the overall point of view, what is the investor mentality related to these two concepts. And right now I will give you the overall summary related to EPS and P ratio. That is an important criteria you need to look, and you need to compare with minimum for 10 years and maximum for 30 years. You need to take a decision of it. Okay, because many people will give many explanation. You can buy the stock and you can sell the stock through the videos as well as for these things. But you can study proper, and you can take a research for minimum 10 years and maximum for 30 years for the respective company. If it is a new company, in a sense, the PE ratio may not be available. It's available for NA, not available. Okay, as well as if it is a negative earning, in a sense, that time also the PE ratio will show for NA. Okay, so you can understand those things. If you're doing for this kind of comparison, then after that you can take a decision of it, whether you need to buy a stock or you need to sell a stock based on this EPS as well as PE. But only if you fall under this one and take a decision, in a sense, that is not a good decision. You need to look for other parameters also, whichever I told earlier. Okay, for the other analysis also, comparison of stock indices. Okay, industry PE also you need to look at, and after that take a decision of it. Okay, I think this video will be helpful for you. If it is helpful, you can follow and subscribe this channel and keep on watch and suggest to your friends. Suppose if there is any query, you can comment below. I will clarify to you. Okay, and if it is useful to you, that is also you can comment below to do more video on it. Thank you friends. Thank you for watching this. Bye.